Bank of America just came out this morning and agreed with me 2 weeks after I said that the inflation surprises we're seeing are driven by the wealth effect on the top 10%, driven by the stock market. They also noted that there's going to be a labor supply shortage uh, because of the shift in immigration policy this year. The interesting thing I'd like to point out here is that everybody thought in April that the administration flinched on tariffs, but here we are in October uh, with worse tariffs than there were during the pause of May and June. I wouldn't call that a flinch. The reason the market rallied is because the rest of the world didn't respond in kind with a all-out global tariff war or trade war. So going into this episode of higher than expected inflation, we have the administration about to appoint the new Fed chair. So essentially, they will shift Fed policy into a regime that suits their political agenda. We have midterms coming up in 2026, November. So they absolutely have to squash inflation, otherwise, the middle class will simply vote out the Republican Congress. Uh, Inflation is not responsible in the same way that other countries were with tariffs. Inflation is just a thing, it just happens. The administration will bear the pain of compressed asset values and compressed consumption in the short term to achieve their political aim. I don't think the market is understanding this at the present, and there are parts of the market that are particularly sensitive to a squash in or less of a euphoric atmosphere for the top 10%. They are the same people that are over consuming and the same people that are bidding up these weird companies that have dubious financial futures.